Now, is it only U.S. real estate, or could they go out and get something in a foreign country whenever they sell?
Great question. First of all, what you see on the internet a lot is they'll say things like foreign property cannot be 1031 exchanged, which is not correct. What they're really telling us is that you can't sell foreign property in 1031 exchange into U.S. property, and you can't sell U.S. property in 1031 exchange into foreign property. But if you've got a client who owns rental, investment, or business use property in a foreign country, and they're going to sell that, it will likely trigger a U.S. tax consequence. So you could 1031 exchange, but you have to buy another foreign property. So it does have to be foreign property for foreign property. And the 1031 exchange would only qualify to defer the U.S. federal tax, not whatever the local jurisdiction is, of course. Foreign countries, whoever the closing agent is, they often think it's money laundering. So we have to get past that and convince them, no, it's really part of the U.S. tax code and it can be done and what have you. And we've done it in about 45 different countries at this point.
Oh, nice. And can you talk a little bit about the boot potential of it? And then you can actually buy more. So if I'm making like $100,000 and as that I need to exchange, I could buy something where I'm putting in 120,000. I just have to kick in the extra 20, right?
Absolutely. So most people actually do trade up in value. So if you sell for 100, maybe they buy for 120, as you said. The $20,000 difference, you're trading up. That could be new debt, out of pocket cash, whatever you want. And most people do trade up either a little or a lot. It's a great way to take your current equity and kind of diversify and build your wealth. Uh, Contrary to what you see on the internet, a lot of times you'll see things that say you have to trade equal or up in value, you have to reinvest your equity, you have to replace your debt. They mean well because they assume you want to defer all your taxes. But you could do a partial exchange, which is what you alluded to, which is you could trade down in value. You could pull cash out. That does not hurt the 1031 exchange, but you're probably going to pay some taxes. It depends on your tax return. So, for example, you may, in your example, maybe you sell for 100,000 and you buy for 80,000. You trade down by 20, and of course, we're ignoring closing costs. But that 20,000 is going to be considered boot. It's taxable boot or taxable gain. Now, you may have other items on your tax return that would offset that. Different kinds of losses might offset that. So it may not actually be taxable, but technically you've traded down. So from a 1031 exchange perspective, that would be taxable boot. And then whether it's taxable or not depends on the rest of your tax return.
Now, are closing costs able to be included in your 1031 exchange?
Yes, although not all of them. So it's what we call your routine permissible exchange expenses. And that's most of them, like your broker's commission, title, escrow, closing attorneys, documentary transfer tax, recording fees. Those are your routine selling and routine purchase expenses, and those can be subtracted on the sales side and added on the purchase side. Anything that is an operating expense, prorated rents, prorated property taxes, HOA fees, those type of things, those aren't closing or selling expenses. Those are operating costs. So those cannot be deducted. Most people pay those through the 1031 exchange or through the sale of their property, but that will trigger a small tax consequence because they're using 1031 exchange proceeds to pay for non-replacement property costs. But I'd say 80, 90% of the clients just pay it through anyways, and it's not a big deal. Um, and then, of course, any financing costs, so lenders' fees, lenders' points, interest, those type of things are not permissible. Again, most people do the payoff through the sale. It's going to trigger a little bit of tax consequence, but it doesn't hurt the 1031 exchange.